Think your credit score is something you just have to wait for? That is the biggest lie in the personal finance world. If you think the only way to boost your score is to pay your bills and wait 5 years, you are leaving thousands of dollars in potential savings and access on the table. Your credit score is not a test of your character. It is a mathematical game. And like any game, once you understand the rules, you can stop playing it by luck and start playing it to win. Most people approach their credit like they are walking through a maze in the dark. They make a payment here, pay off a balance there, and hope for the best. But the scoring model used by the major bureaus is actually quite predictable. It is a formula, and that formula is currently punishing you for things you do not even realize you are doing. Let's start with the most misunderstood concept in the industry: credit utilization. You've probably heard the rule, keep your balance below 30%. But here's the secret the banks do not broadcast. That 30% number is the ceiling, not the target. If you want to see your score move in 30 days, you need to be aiming for under 10%. And it's not just about your total limit, it's about the balance reported on your statement closing date. See, most people pay their credit card bill on the actual due date. That's the wrong time. If you wait until the due date, your statement has already closed, the balance has already been sent to the credit bureaus, and the damage to your utilization ratio is already done. Instead, log into your account a few days before your statement closing date. Check your balance, pay it down to a near zero amount, maybe $5 or $10. By the time the bank reports to the bureaus, they'll report a tiny, negligible balance. To the algorithm, it looks like you're using your credit, but you're not over-leveraging yourself. Do this across your cards, and you can see a double-digit jump in your score within a single billing cycle. Now, let's talk about the spine of your credit file, the age of your accounts. This is the hardest variable to fake, which is why it holds so much weight. If you've been tempted to close that old store card or that first credit card you opened back in college because you don't use it anymore, stop. Closing an account does two things, both of them bad for your score. First, it reduces your total available credit, which instantly spikes your utilization ratio. If you have $5,000 in credit and you owe $500, you're at 10%. If you close a card and your limit drops to $2,500, that same $500 balance just pushed you to 20%. Second, it shortens your average account age. A long, established history is a signal of stability to lenders. Even if you never use that old card, keeping it open is like keeping a senior employee on your books. It stabilizes the entire structure. Just put a small recurring subscription like a streaming service on that card and set it to autopay. That keeps the card active so the bank doesn't close it for inactivity, and it keeps your credit history growing. But what if you're starting from zero? Or worse, you've made mistakes in the past. This is where the concept of the authorized user becomes your greatest shortcut. If you have a family member or a partner who's been responsible with their credit for a decade, someone who never misses a payment and keeps their balances low, ask them to add you as an authorized user. They don't even need to give you the card. When they add you, their positive history, their age of accounts, and their payment records are essentially mirrored onto your credit report. It's like inheriting a credit history that you didn't actually build. Within a month or two, you gain the benefits of their long-term stability. Just be extremely careful. This works both ways. If you attach yourself to someone with a history of missed payments or high debt, their mistakes will become your mistakes. Choose your partner in this carefully. Now, let's address the elephant in the room: errors. Most people treat their credit report like a holy document. They assume that if it's on the report, it must be true. That's a mistake. Data entry errors, mixed files with people who have similar names, and outdated information happen more often than you think. You need to pull your credit reports from the 3 major bureaus. Look at every single entry. Are there late payments listed that you know you paid on time? Are there accounts that don't belong to you? If you find an error, you have the right to dispute it. And when you dispute it, the burden of proof is on the creditor. If they can't verify the information within 30 days, they are legally required to remove it. You'd be shocked at how many people have 20 or 30 points hidden behind an error that they never bothered to check. There's also the matter of credit applications. Every time you apply for a loan or a credit card, the lender performs a hard inquiry. This tells the bureaus you're looking for more debt. If you're doing this frequently, it sends a red flag to the system. It suggests you're desperate or overextended. You want to keep your applications spaced out. Think of it like a diet. You wouldn't eat 10 meals in one day and then fast for a week. You want consistent, steady habits. If you're looking to open new accounts, do it strategically. And avoid the trap of opening store credit cards just for the 10% discount at the register. Those cards almost always have high interest rates, low limits, and they clutter your report with unnecessary inquiries. You have to remember that your credit score is a reflection of your risk profile. Banks don't lend money because they like you. They lend money because the data proves you'll pay them back. When you focus on paying your bills on time, keeping your balances low, and maintaining the age of your accounts, you're essentially telling the algorithm that you're a safe bet. There's no magic pill, there's no secret software. There's only discipline and the knowledge of how the system calculates risk. If you're currently struggling, pick one of these areas to optimize this month. Maybe this month is about cleaning up your utilization. Maybe next month is about auditing your reports for errors. Don't try to change everything at once. Small, deliberate actions compound over time. The goal is not just to have a high number. The goal is to have access to the best interest rates, the best financing options, and the peace of mind that comes with knowing you have complete control over your financial reputation. You're not a victim of the system. You're the architect of your own profile. Every time you make a move, you're either strengthening your position or weakening it. Choose the path that builds your foundation. After all, your credit score is the gatekeeper to your financial future. Treat it with the respect it deserves, and it will eventually open doors you never thought were possible. Start today, stay consistent, and watch the numbers shift.